Welcome. In this video, Xcn coin has formed a bullish pattern. Is bullish coming? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. When we closely examine the chart, we can see that a highly characteristic pattern is taking shape. This pattern is known in technical analysis literature as a falling wedge, and it has long been regarded by investors as a strong bullish signal. The key feature of this structure is that price moves within a narrowing range, forming lower highs and lower lows. However, this appearance can be misleading, as these types of formations typically indicate that a downtrend is nearing its end, and that the price has the potential to break out to the upside. Therefore, this falling wedge pattern we currently observe could be a strong indicator of an important opportunity for investors. The most notable aspect of a falling wedge formation is how price action compresses into a triangle-like structure over time. This compression can lead to decreased market volatility and reduced volume. However, this declining volume and narrowing price range are often precursors to an explosive breakout. When the price eventually breaks out of the structure to the upside, the stored energy is released, and this often results in a sharp and powerful rally. Thus, the current falling wedge on the chart is not just a pattern, but also a strong signal of a potential trend reversal. At the moment, we see that price is moving between the upper and lower boundaries of the wedge. However, with careful observation, it becomes clear that touches to the lower support line have decreased, and price is gradually hovering closer to the upper band. This is a positive sign that the market is slowly freeing itself from selling pressure and that buyers are gaining strength. An upward move toward the upper boundary and a breakout above it would technically confirm the uptrend and signal the start of a new bullish phase. It's important to remember that falling wedge patterns statistically tend to break to the upside. In technical analysis, this is one of the few patterns that appear during a downtrend or sideways movement, and are more likely to result in upward breakouts. Especially when observed on larger time frames, such wedge breakouts can pave the way for significant rallies. For this reason, a breakout from the formation to the upside would be a highly positive development for investors. Additionally, throughout the price movement within the wedge, each dip becomes less severe, showing that buyers are gradually entering the market. This signals a significant shift in market psychology. Sellers are losing strength, and the buying side is slowly becoming dominant. This psychological shift sets the stage for an eventual upside breakout, which is often followed by strong upward momentum. The breakout itself is critical. If price can break above the upper resistance line with strong volume and a clear candlestick formation, it would be a powerful confirmation that the uptrend has begun. Typically, this is followed by a retest, where the price returns to test the broken level as support. If this test is successful and price bounces from this level, it is considered a very reliable bullish confirmation in technical analysis. The breakout plus retest combination provides investors with a strong entry opportunity. In such a scenario, several key targets will emerge. The typical breakout target for wedge formations is calculated by projecting the height of the widest part of the wedge upward from the breakout point. But we can't base our analysis on the pattern alone. Let's continue looking at other metrics. Stay tuned. When we closely examine the chart, we can observe that the price action is forming in accordance with the Elliott wave theory. This theory allows for the analysis of psychological market fluctuations in a numerical pattern and is considered a highly valuable tool for investors aiming to predict market direction. Looking at the current structure, it appears that the price has completed its second wave and is now entering the third wave phase. This transition is often recognized in technical analysis as the stage during which the strongest and most aggressive rallies occur. Therefore, the current position presents a highly promising and opportunity-rich outlook for investors. According to Elliott wave theory, a trend consists of 5 waves, with the third wave typically being the strongest and the one where price gains the most momentum. This wave begins after the correction phase that follows the first wave ends. And as more investors recognize that the uptrend has truly begun, aggressive buying activity kicks in. As a result, the third wave is where the majority of market participants join in. Momentum and volume rapidly increase, and the price rises in a much steeper trajectory. It is not surprising, then, that the third wave is often the most profitable for many investors. Given that we are currently in the early stages of the third wave, it's important to consider key target levels based on Fibonacci ratios. In technical analysis, Fibonacci extension levels are among the most commonly used tools for estimating the length of the third wave. Specifically, the 1,618 and 2,272 levels are critical thresholds when projecting potential targets for this wave. Typically, The third wave extends to at least 1.618 times the length of the first wave, and if that level is breached, the 272 level becomes the next likely target. These ratios are not arbitrary. They stem from the nature of market psychology and have been proven accurate time and again in the past. Looking at the current price action on the chart, a strong reversal has taken place following the completion of the second wave correction. This reversal signals the beginning of a new uptrend and also indicates that the third wave is gradually taking shape. In this context, it is highly plausible for the price to reach the 1.618 Fibonacci level. Achieving this level would confirm that the third wave is forming in a healthy manner, and it would also suggest that the price could potentially maintain its momentum and progress toward the 2.272 level. This potential is not merely a theoretical expectation, but a concrete projection supported by technical analysis. Especially when considering the depth, duration, and structure of the second wave correction, it seems that the necessary groundwork for the third wave to reach the 1.618 level has been laid. Furthermore, the increase in volume during this transition, positive signals from momentum indicators, and bullish crossovers in oscillators all validate that this is not just a temporary reaction, but a structural upward move. This potential move within the third wave also draws the attention of large investors. Strong and consistent rallies of this kind often trigger institutional buying and high-volume transactions. This can help the price move more solidly and swiftly toward target levels. In technical analysis, such behavior is interpreted as a sign that smart money, major market players, has entered the market, and the direction they take typically defines the broader market trend. A closer look at the chart reveals a previously formed falling trend line on the RSI indicator. This downtrend showed that the RSI was moving with low momentum for a certain period of time and represented a period when buyers were not dominant. However, with the recent price action, the RSI broke this falling trend line to the upside, giving a very positive signal. This breakout is an important development in terms of technical analysis and suggests that a positive shift in market sentiment has begun. In particular, the RSI breaking through this level not only breaks the weak momentum of the past, but can also be an early and reliable sign of potential future bullish moves. Breaking this downtrend to the upside also creates a positive mood in terms of investor psychology. When a momentum-based indicator like the RSI breaks a downtrend, it usually indicates that market participants are now more buyers than sellers, and that a process has begun that contributes positively to price movements. This reversal on the RSI is a clear indication that buying pressure is increasing, and often such breakouts are among the first signals before major price movements. Especially since RSI provides traders with the opportunity to see inherent strength and weakness independently of the price chart, such technical breakouts provide valuable information about market direction. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.